Okay, so if you still have questions, you can just use and ask. So let's just go ahead. Yeah.
Please, I have a question.
Okay, go ahead and answer.
Mentor, please, the question is about how to calculate PIBs when using a Naira account.
Okay.
That's my question.
Seems like you were the one that asked that question earlier today. Yeah.
Yes, yes.
Okay, now let's head straight to that now. It's a bit simple because even when I checked yesterday for a position size calculator that just calculates straight up in Naira, I didn't see anyone here. Because sorry, your mic is on. Okay, so there is no definite, like there's no fixed position size calculator that calculates in Naira, but then again, you can still get it done through this way now. This is it. It's very simple. What you should do now, this is our position size calculator we use, right? On calculating gold, my FX book. So what you should do now, okay, we trade gold. If you look at this currency part, you see that there's no NGN, which is Naira. There's no Naira here. So you still keep it to USD. The thing you should do now is know the equivalent of that particular amount in dollar. Let's say, for instance, like I saw someone deposited 7,500 on Exness. 7,500 should be around $10 because Exness rate, is 740 something, 43 or so. So let's say whole round up is $10 now. So you would put the $10 because you know the equivalent of that money now in dollars. So put it in. You can swap to money if you don't know the risk percentage. You swap to money. Okay, I want to risk let's say out of $10, I want to risk $20 in a trade. You remember it's still Naira you are trading, but since you know the equivalent of the account size, you don't need to know the equivalent of your risk yet in Naira, but just know the equivalent of the amount, which is $10. And you know, $20, risking $20, you know, we swapped it to money. Risking $20 on a $10 account means you are risking 20% of the account, you understand? You might just, okay, I want to risk 10%. You know the risk percentage, you swap back to risk and write, okay, I want to risk 10%. Then your stop loss, maybe 20 pips or 30 pips. You come to this trade lot, you remove 0. Remember, MetaTrader 4 is 0.01 minimum, right? So you click calculate. That 10% you are risking out of that $10 is what? Is how will I put it? 10% is $1, right? 10% of $10 is what? $1. So you see, it's very small on good. It's very high compared to 30 pips, and so that kind of risk is not even. Okay, let's change it to 20%. So now, when you change it to 20%, now 20% is what? $2. Yeah. $2 in a $10 account, it tells you the lot size you should use, you understand, which is 0.01. So you should just carry this lot size, put on your MetaTrader 4, put the stop loss, and if you should lose or if it should go against you, see that you won't be losing more than the required amounts, you understand. This $2 in equivalent, like the $2 equivalent in Naira, you understand. So what you should be your main focus is to know the amount of your account size, the equivalent of it in dollar first. Then the risk percentage would be still based in dollar, you understand? It should still be based in dollar. Let's say, imagine we deposited $100 and $100 should be around 70 something, let's say 75,000 in Naira, but you don't know how to calculate the risk. What you should do, come and put the $100 here, put the risk that you know you can afford to lose. Let's say you want to risk $20. $20, if you calculate it, $20 is what? 20%, you understand, of $100. So you put 0.07. And if it goes against you, you will be only losing $20. $20, the equivalent of $20 in Naira, that is what you'll be losing, you understand? So it's very simple. If you really understand this concept, it's very simple. Just know the equivalent of that particular money you funded, the equivalent of it in dollars, then keep doing your risk in dollars, and you'll be only losing the equivalent of that 2 weeks in Naira. You understand? Because there's no fixed position size calculator that calculates in Naira. So just play smart, you understand? And you still be doing the same thing and winning the same thing, you understand? Hope you understand the explanation.
Okay, yes, yes.
You're welcome, Chief. So I can see other hand raised. Oyembo, oh, sorry, Divine Favors. You can unmute and ask.
Okay, boss.
Yeah.
Thank you for the question. I have another one.
Okay. Go ahead.
Okay, when we are in an uptrend,
Okay.
and we have a trend line,
Yeah.
then suddenly it breaks out of that trend line.
Yeah.
It means you said that for us to be on the safer path, we should allow the first low to form. Then we enter when it breaks that low. That is the neckline strategy.
Yeah.
I wanted to know, when you are trying to spot that low that is forming, it seems I get many candles, many opposite candles. I don't really know the one which is the main low.
Okay.
It affects me when I'm plotting other levels. Just too many candles.
Okay. Okay. So in an uptrend or in a downtrend, should I use an uptrend to explain?
Anyone, sir?
Okay. Let's clean our charts. Let's say this is an uptrend, a clear uptrend, yeah, and we use our trend line. Let's just do something real quick randomly. This is it. So we had the first touch here, a push to the upside, second touch, a push to the upside, the third bounce. So now the recent how do we put it? The recent high is very clear. What you should know is, like, this market that pushed up like this and started coming down, it's creating a new high here. This is a high. You understand? Like, even this, let me put it this way: if you see a market moving in a particular direction and start retracing, know that that point where it started retracing from is a what is like a high or a low, depending on the trend. You understand? So for the neckline strategy, we use it to identify fakers. You understand? So, but then again, for those that wants to play it safe, there are some people that don't want to cash all this sniper entry, because sniper entry can be risky on its own. So there are some people that wants to play it safe, which they do use this neckline trading concept when taking their entries. You understand? Let's say, for instance, at this point here, let me show you. It's if you are using the neckline strategy, your risk to reward is not always high again. It will be low. Let's say when the market came down here, went up, the next thing you see is a push to the downside. This thing might look low here on the 4 hours time frame, but if you should go down to, let me draw the box first before going down. This point, so I would know this point when we go to the smaller time frame. So I want to just explain that neckline concept here. So if you should go down to the 1 hour time frame at that level, so you see that retracement clearly. So you see the retracements here, a push to the upside. This is it. So this point here now is a neckline. This point here is a neckline. So for most people here, they only trade once the market comes back to break this neckline. But now let's look for a retracement, a clear retracement first. Let's use a clear retracement. Yeah, I'm coming. So this is the zone we drew from the 4 hours time frame here. So we're waiting, let's go to that 4 hours time frame to put our horizontal ray first, like our normal actual entry first. So our entry would be horizontal ray, would be at the top of that candle here, which is the top of the candle there. Let's draw the box very well. So this is the box now. This is where our entry would be. You understand? So when the market came down, broke that level, this point here is a high, a recent high here. So most people only trade when the market actually breaks all this level, like those using the neckline trading concepts. Only trade when once it breaks all this level, like this level. Because imagine you coming down to catch this sniper, and at the same time, the market broke that level and started going down. You understand? So they want to play it safe. They would only take a trade once the market start going in that direction and breaks the recent high. Like imagine this candle that broke this thing. This second one, they will enter their trade here, put their stop loss below, and start riding the market the way up. You understand? But I only use that trend, that neckline trading concept, especially when to identify fake. I don't use it specifically to place a trade. But if you want to use the neckline strategy, it should be something like this. As the market went up, came back to retest, they don't take their trade off this level, yeah. They wait for the market to break that candle, that recent high. The candle that breaks it, they would enter, they put their stop loss below that candle and start riding the trade way up. You understand? But I only use it when I want to identify like a trend breaker. Let me show you when I use it too, so I also get a clue when I use that trading concepts. Let's look. Coming. Okay, let's use this one as an example. Okay, so like this level now, there's a trend line coming from the downside too. And we should draw, let's say at this level now. Okay, it trades actually well. And there's another one coming from this level too. Or let me keep it at the top here. Okay, let's just keep it here. Refresh the page. Okay. I'm just doing this thing randomly. It's not like, just want to show you an example of what I mean. So as this market came, it touched here, first touch, second touch, it's value already now. So this third touch, and the next thing we see a push to this upside, right? So as it does this retracement, our neckline would only say that this market is actually breaking this level if the market comes back to break this level. This level, this is the neckline here. So some people, once they see this push, they'll be like, this trend is changing, they will enter from this second candle, and you see what happens, it will just automatically hit their stop loss. So those people that plays it very safe using the neckline, once this market breaks it, they won't enter first. They'll wait for a retracement, because once the market breaks a trend line, it must come back to do a retracement. You understand? That is normal. But the one that does immediate break, that does break and start going, that one is not that common, but it happens. You understand? But it's not common. The one that is very common is that break and retest. So they'll wait for that retracement, and you see the retracement that happened. So in case this market does not turn back to go up, they will be on the safe side. But those that enter up this point without waiting for the retracement, if the market should come back and start doing its thing, you will see that they would get hitting out. You understand? So those neckline people plays it safe in essence, like they wait for a retracement, and the candle that comes back to break it shows them that this is an actual breakout. You understand? So they would enter off the second candle. It should be something like this. A long, it should be something from the second candle. And their risk to reward is not that always big. You understand? Enter up that candle, and their stop loss might be at the recent low or below that point. You understand? So it's their risk to reward is always minimum of 1:2, or maximum, 1:2. It's not that huge. It's always small. But then again, they are the ones playing it smart. You understand? So this is how it looks like to trading that neckline concepts. You understand? It's something like this. Similar something also in a break and retest. The market comes back to retest. As it starts going in their direction, they wait for it to break a particular neckline, you understand, before taking the trade. You understand? So but this way it works perfectly on drawing a trend line here, and it pushes up. You use this neckline to see if this is an actual break to the upside. You understand? So this is how it looks like.
Okay, thank you, sir.
Okay, yes. So this way you should use it based on something like this. And this pattern you see, you might look like this thing does not happen always, but if you should be backtesting very well, you see that this particular pattern, this symmetrical triangle, happens a lot on gold. It happens very like let's shift this thing again, this particular thing to this point again. You will see that symmetrical triangle happens almost every point. If you should adjust your trend line again, you see that it happened here again before this push. You should carry it again to this level again. Similar thing again to this level, you see that it still happened. You understand? All the symmetrical triangle is one of the common pattern that happens most on gold. You should adjust again. You see that symmetrical triangles happens a lot on gold. You could see it again. This was the highest point the market went to, and when it pushed up, it came to the retracements. Your neckline, this line would be at this point here. To see if this push to the upside was an actual this retracement. So as the market came back, the candle that breaks it with a full body, remember. So this was the one that breaks with the full body. This your entry would be at the second candle. Let's say this second one here. And your stop loss maybe below the recent low. And this is 1:3, but it's always 1:2 when you want to, because the risk reward shouldn't be that big, 1:2. So it's just something like this. You understand? So you might say this symmetrical triangle doesn't happen always, but it happens. You understand? Okay. I see someone, Isaiah, you can unmute and ask.
All right, sir. I want to ask is, what I want to ask is, do you have a full video that talks about and exit?
Is it?
And that is one. And secondly, what are the currency pairs that work with this particular strategy? So
Okay. Sorry, your first question again.
I said the first question is, do you have a full video on entering and exit?
Okay.
First question.
Yeah. And the second one is
the
first.
Is what are the pairs that works well with this
strategy,
so that we can
yeah,
just have them on our watch list.
Okay.
That is 1 or 2. Yes, sir.
Okay. So for the first question, the entry and exit, we have a video from the back end that we did, like on our previous classes. We did a video on entry and exit strategy. You understand the entry and exit? Yeah. So just after this class, in case you don't have the video, just after this class, just DM me and I will send you the link to that particular video. Okay. Now, for the pairs that works based on this strategy, that works best with this strategy, we have this gold itself. We have GBP JPY. GBP JPY. Yeah. So minimize stuff. Break and retest happens a lot. Like it works perfectly on GBP JPY. If you should pay attention to it very well, it works perfectly. So most of the time, if I don't see a trade on gold, I come to GBP JPY to take trades. You understand? I come to, let's say, for instance, at this point here. So if you should come to it, you would just see it randomly. Let's say, for instance, this is an uptrend here. This was a recent level before the market came down, went up this thing and came down. You just come draw your box. Let's say from the recent high. Apart from this one, you know that there is another level again below it. This point here, it might look small, but if you should come to the 4 hours time, let me refresh it. Where did we draw that box from? I'm coming, let me go to that level where we draw that box from. And this is it. Is that point. I'm just showing you that you see, I just entered the pair and I see a clear retracement. This is the recent one here. So
yes, sir.
Just it to fit that particular one. So this is it. And remember, our horizontal ray should be above that candle body, and our entry for a long would be here. Our stop loss below the box. Our TP, the recent high. This is it. even though they didn't come close. But then again, imagine you holding trade to this level. You see the risk to reward 1:6 risk to reward. You saw that the break and retest is very clear. Let's go back to the bigger time frame where we saw the break and retest. You see, it happens a lot. Because this is one of the pair, and if you should go to silver, we trade gold, but it works also on silver. You see, they are on my watch list too. It works perfectly well.
Sir.
And silver moves exactly like gold. You see the way it is now. If you should go to gold, you see gold is also, you see similar movement.
Yes, sir.
So silver also moves. This strategy works on silver, which is XAG USD. XAG USD.
USD.
Okay. So that's the pair I give you guarantee to use that it works perfectly on GBP JPY and silver into your goals.
Okay, sir.
It works very perfectly. Okay.
Thank you, sir. Thank you, sir.
You're welcome, Chief. So I don't know if there's any other question.
Okay. Good evening, sir.
Yeah. Good evening, Chief.
Yeah. Okay. My question is on low of the weeks on GBP USD.
Okay.
So I noticed something. Abi, let me just ask it this way. You said when it moved 50 pips, that was on a Monday. If it moves 50 pips, either up or down, it shows direction of the market for the week. Okay, what if it has moved 50 pips and then later on, like currently now, I think if there should be a buy, it's going to move under 50 pips up again against the sell already.
Okay.
So what will now happen if it moves 50 pips against when it has moved already?
Now this is it. That's why we don't use high and low alone as our trading confluences. You understand? Because sometimes, let's say, this is GBPSC. Let's say these two line. Let's just imagine this two line is the high and low of the week. You get, and the first break was 50 pips in the up direction. You get, so we will be expecting a buy throughout, and the next thing we see is a push to the downside. You understand? And a move to the downside throughout the week. You get, so what you should do is don't just trade high and low on the week. Like, don't take it more like a signal throughout that week, because the market is dynamic. You get, you don't just predict it. There are some time where it will break to the upside 50 pips and throughout that week to be buy. You understand? But then again, you should always also follow this thing. How will I put it? You should always follow the technical part of the market. You understand? Imagine we are in a downtrend and the high and low of the week, they kind of broke to the upside. You understand? 50 pips to the upside, and we are in a downtrend. So you won't start looking for a buy in a downtrend. Instead, with that whole concept, you should be looking for what's a sell, even though it gave you a signal to the upside. That's why we say all strategy it's not 50%. How will I put it? Because it's not 100% win rate. You understand? So you should always trust the analysis. That's why you need to have other confluences. Other confluences are telling me it's a buy, and high and low of the week is telling me to sell more. You understand? I would pay attention to the one that is telling me to buy, because those ones are 3 and high and low is just 1. You understand? So your technical analysis should already give you a clue of what to do. Don't just base your technicals only on high and low of the week. You understand? Base it on other confluences, the ones that has the highest wins. You understand? Then what you should do is, now, how do you work the high and low of the week to work with the other confluences? You understand? So that's just it. Hope I answered your question.
Yes, sir. Thank you.
You're welcome, Chief. So I don't know if there's any other question. Okay, TJ, you can unmute your hands.
Yes, sir. Yeah.
Okay, go ahead. I saw your hands raised up.
My question is, will you be able to be, yes.
Come again.
The exact time frame, like the main time frame that the psychology level should be drawn.
okay, you can draw it on all time frame. You understand? So far as it's 50 pips different as a day trader, then it's accurate. So you can draw it on the 4 hours, you can draw it on the daily. You can see this one, I can still draw it on the daily. I can still go down to the 4 hours and draw the psychological level. You can draw it on all time frame. It's only on GBPS the way you draw the high and low, only on the 4 hours time frame, you understand? And not on all time. But psychological level can be drawn on all time frame.
Okay.
Yeah.
That's my question.
Okay. Promise, your hand is serious stuff. I don't know if you still have a question.
So I have a question, sir.
Okay, yeah, go ahead. Okay, yeah, go ahead.
In one of the previous videos I watched, you were making mention of if we can, like, in terms of working on our psychology, if we can just practice this thing using a ProFirm account, the free one. So I don't know which of them you're going to recommend to us to start with, so that we're testing all of these teachings you are giving. Thank you, sir.
Okay, yeah, the one that really, not all of them that it's not all the ProFirms that give free trials. You understand? So there are some specific ProFirms that give free trials, like FTMO. This particular website where I am now, FTMO, you can see there's a free trial and the actual challenge here. So FTMO gives free trial. So you can use FTMO for free trial. MFF, which is one of the ProFirm I would recommend when you want to go live, does not offer free trial. So the other ProFirm that offered free trial is E8 Funding. Yeah, I'm sure E8 Funding offer free trial also, if I'm not mistaken. E8 Funding offers free trial. Let me see if it's still available, because it seems like I've seen their free trial before. Okay. Seems like it's, yeah, E8. Let me search it this way. E8 Funding. E8 Funding free trial. It seems like they also offer free trial. So it's mainly, but the ones we use commonly is FTMO. Yeah, FTMO. So you can use FTMO. Just come to their homepage, click on free trial. Yeah, click on free trial. They would give you a space to register. You understand? You can just put your email, put your password, you get, and sign it. You understand? Then you select the account size you need. $10,000, 50. But I would always say this: make sure you choose an account that you know if you want to migrate to, like if you want to start trading live, it is the account that you want to buy. You understand? Imagine you going to pick $200,000 account when you know that once you want to go live, you'll be trading a $10,000 account. You understand? So make sure you pick an account that you know that if you want to start going live, that is the particular account size you want to start trading with. You understand? So if I know that I'm going to start with a $10,000 account, you start trading a free trial with that particular 10,000. Why? Because it will give you this mastered psychology. Because even when you are not with, you are not putting your, you didn't calculate your risks. You understand? You will still know the particular loss size to use for that 30-piece stop loss. You understand? Because it's the accounts you have been using to demo trade for a long time, so you know the kind of loss size to use even without calculating it. But on 30 pips, I know when I was using that free trial, 30 pips, I use this particular loss size. Just put your thing. 20 pips, I use this particular loss size. Just put your thing. You understand? It will give you this flow of this mastery, confidence. You understand that truly I know what I'm doing. This was the account I was demo trading with. You understand? So always use an account that you know that if you want to go live, this is the account to start trading with. You understand? But the one I recommend for demo trading is FTMO. And once you want to go live, I recommend MFF. Yeah, this is why. FTMO minimum days, like if you should pass it, their minimum days to switch to the next phase is 10, while on MFF is 5. And again, FTMO max loss is 10%, while on MFF max loss is 12%. And FTMO profit target is 10%, while on MFF is 8%. You could imagine. And again, the price rates in FTMO is high and MFF is low. FTMO does not allow all kind of trading style, while MFF allows any kind of trading you can. It allows hedging, copy trading, different kinds of things. But if you should use that kind of concept on FTMO, you might get your account violated, you understand? So MFF allowed any kind of trading. You can trade in news because there are some profits that you can't trade news with. And there are profits you can't hold trade over the week. There are some profits you can hold trade over the night. You understand? So there MFF allows all style of trading. So I would always recommend MFF when you want to go live. You understand? But sometimes the other problem I also recommend is EH funding when you also want to go live, because that one, if you should pass the challenge to the phase 1, you can just switch to phase 2 instantly. You understand? That is for those that know that okay, they are FS Guru, we don't have time to waste. I just want to do my thing sharp. You can use EH funding, but I recommend MFF. You understand? Because we all are different kinds of traders. We have the aggressive types of traders, we have the conservative. So MFF accept all. You get. Hope I answered your question. Okay. So I don't know if there's any other question. You can still unmute and ask. You still have a question?
Hello, sir.
You have a question? Yeah.
Hello, sir.
Yeah, go ahead. Yeah, go ahead.
Okay, sir. I want to ask if I can run a conservative account of $20 just to practice as well. To let me just watch out my growth.
Okay, like a $20 account, right?
Like $20 account,
yes.
Okay, over a period of time.
Okay, yeah, sure. It's working because it gives you this different psychology. You understand? Because a demo account has a different kind of psychology, but a real account has its own feel, its own psychology, because you know that it's actually a real account you are trading here. You understand? So, and you don't want to lose it, you get. So it's a good one to start with. Yeah, it's a good one. So first, you know what you are doing, you know that, but it should be an amount that you know that you are ready to lose, that if you should lose it, it won't really affect your psychology, then you are good to go. But if it's it's an amount that you know that if you lose, it will really affect you, I won't recommend you doing that, you understand? So, but it should be an amount that you know, because once you put the money in your broker, it's not your money again. It is everybody's money. And if you don't know how to trade, your broker will help carry the money and give to those that know how to trade. You understand? So that's how it works. The money you are making from Forex is other people's losses. You understand? So you should know what you are doing. If not, they will carry your money and go and give it to Lesiba or give it to Jeffrey Benson that knows how to trade or knows what he's doing. You understand? So, but it's a good one to go, and I trust you all that you can get it done. It's not that hard. You are the one making it complicated. So just stick to what you are doing. Follow your trading plan. Keep journaling your trade, and you would see huge difference. Yeah. So it's a good one to start with. Yeah. Okay.
Thank you, sir.
Yeah, welcome, Chief. I don't know if there's any other question. We have already spent close to 2 hours. Yeah, no mistaken. Yeah, we started. Okay, this is an hour plus. So I don't know if there's any other question.
Hello, sir.
Yeah, good evening.
Good evening. I don't have a question. I wanted to share a little experience.
Okay.
Okay. When trading live accounts, there's something I realized.
Yeah.
I realized that the money you put into your account does not belong to you, or whenever you're taking a particular trade and probably you start seeing money does not belong to you until you have closed
the trade. Yeah, that is it.
it was so hard for me to realize that, because there's just this excitement you get when you start seeing profits, and you start feeling, oh yes, I'm doing well,
Yeah.
seeing money, and before you know, there could be a whole lot of retracement that I didn't even expect, probably a news or one thing or the other. So I would want us to just put our mindset that whenever we play a trade, just know that that money does not belong.
Exactly. It's
Yet your
everybody's
money,
money.
that that is when you're sure that, okay, this is now my money. So it really
Yeah.
help us.
Yeah. Yeah, thank you for that tips. Yeah, that's just it, because it happens a lot. Even when I was talking on the forex advice and everything, I made mention of that. Imagine me posting, like, then if I make profit, like I will see a profit of 500, profit of 1,000. Instead of me closing, I'll go and screenshot it and go to post it on my social page first. You understand? And not knowing that that money is still floating. It's not my money yet. You understand? It's still floating. I went to post the picture first, $1,000 profit, only to come back and see that the thing has reduced to 500. You get, and I'll be like, I posted 1,000. Let me just wait. Let the thing go up a little bit again, maybe 700. I will close. The next thing I will be seeing is 200. So the money so far is still floating. It's not your money. You get. So you should know that also. Until you have closed the trade and the money is in your dashboard, that's when you can say, yes, this is my money, the money I made from forex. You get. So far as it's floating, it's not still your money. Yeah, thank you. Thanks, Miss Mary, for that tips. Yeah. So I don't know. It seems like that's all. I don't know if there's any other question. I've answered a lot of questions already today. So I don't know if that's all. Okay, seems like that's also. It's already 1 hour plus 1 hour 20 minutes already, so we'll have to call it a day. I just wanted to make sure that everyone is following up with it, because I know there's a bunch of questions that I can't just answer privately, you understand, but it needs practical, like the way we are doing here. So that's why I do host Zoom class twice a week, so as to make sure, even though one is for teaching, one should be for questions and answers, you get. So thank you guys for coming. I really appreciate it. Thanks. And I keep seeing your growth in the group. Keep doing what you are doing. Keep posting your analysis. Keep trusting your analysis. That's just the thing. You understand? Thanks again for coming. Yeah, thank you.